Welcome to MasterStroke.
Thank you. Thank you so much.
Where are you right now? Because you are traveling, right?
Yes, I'm in my hometown right now at Jorhat, Assam.
Yeah.
And of course, thanks to Zoom, now you can be anywhere and still carry on.
Wonderful. So a quick note on, let me introduce our speakers and moderator. Let me first introduce Dilshad Billimoria to you. First of all, Dilshad, I have been knowing for 20 years, if not 21. We started with ICICI Life Insurance Company in 2001-2, and ever since we have been good friends, and we have seen the journey of this industry. Dilshad is the founder, principal officer, and certified financial planner and managing director of Dilzer Consultants Pvt. She has 20 plus years of experience in the financial advisory domain. With over 350 families, she believes she has created financial peace and independence in many people's life and help them realize their financial goals. Dilshad's article and views are regularly published in Outlook Money, Money Control, ET Wealth, Mint Newspaper, Financial Planning, Standard Boards, India Magazine, The Hindu, and whatnot, including Economic Times. She sits on the board of Registered Investment Advisors, ARIA, to work with SEBI to improve the RIA community. Dilshad is also on the founder executive committee, member of Council of Financial Planner, an association to help foster advisory services industry growth. She is also a Life Underwriter Training Council Fellow, LUTCF, from the American College, US. She has a lot of accolades, and she has been, Dilshad has won the top 100 Women in Finance Awards from the Association of Wealth Management of India in September 2020. Besides that, I have known Dilshad, and I want to share this note. When I called up Dilshad, and she will agree, that Brijesh, why me? There are so many fantastic speakers that you have already chosen. Why me? And I said, Dilshad, this is my platform. I know who to call, and I know who you are. Am I right, Dilshad? And then I and
so
then.
I mean, what a wonderful introduction. Thank you very much for that, Brijesh.
Pleasure is all mine. And I said, and again, Dilshad is someone, I'm sure she is from Bangalore, and not many people across the country knows her because she does her job silently. And as I said, we have a few speakers, many of us don't know her, but they're doing just fantastic job. And Dilshad is one who is one of the finest in the country. And she is both an RIA as well as a distributor. So Gajendra will speak more about this. And quickly, I would like to introduce Gajendra. Gajendra, again, a very dear friend of mine, and I always know him as a one idiot person, and most of you know him as a one idiot person. He's one of the finest in the country. Etika Wealth. Gajendra has more than 17 years of experience encompassing both Indian and overseas capital market. He has been leading Etika Wealth since 2011. Prior to that, he was vice president and head products for the portfolio management division at UTI Mutual Fund. He was also business development head for the UK and European markets for UTI International Limited in London for a span of 3 years. He has been writing a lot, giving a lot of lectures, more than 200 lectures, having more than 25,000 participants. He goes to B schools and whatnot. He does everything but sells mutual funds. And still, he's one of the top 10, 20 distributors in the country. And he has a fantastic office in Bombay. I have the privilege of going to his office as well as have food at his house, which is near to his office, and it was also wonderful. And I have not met a more humble guy than Gajendra Kothari in the financial industry, and I always say that he is one of the role models of the mutual fund industry. So with this, I will leave the dais to Gajendra and Dilshad. All the very best.
Thank you so much, Brijesh. Welcome, folks. A very good morning to you. Welcome to the MasterStroke National Conference 2022. This is the first ever conference organized by MasterStroke, and I hope you all have been enjoying the kind of proceedings so far. The topic, as in the theme of the conference, is ideas that ignite. Okay, so in next 20-25 minutes, I hope to kind of pick Dilshad's brains and get some ideas from her that can ignite some thoughts, in our minds and can help propel our growth in the future. So before kind of getting further, of course, Brijesh, you have mentioned a great deal about Dilshad. Dilshad, I just have one question to you. What does this name Dilzer Consultant? Dilzer means in Dilzer Consultants. Many of our audiences must be intrigued by this name.
Right. So firstly, thank you very much for having me, Brajesh, and MasterStroke. I wish many more of such MasterStroke events. I help to educate our industry and community. And thank you, Gajendra, as well, for moderating the session. So the name Dilzer is a combination of mine and my brother's name, and I just continued using the same name which my father had started back in 1983. So it has been lucky for me, and ever since, growth is the only path that we've taken.
Wow. Every name should have a story, and yours is a fantastic story. Very few times we see the rare combination of a brother and sister's name in a firm's. I think this is the first of its kind I've heard, over the years. So great to know about that. Okay, great. So I think you are one of the very unique speakers in this forum because you don a hat of both RIA and MFD, which is still very rare in our country. So you took RIA license quite early in 2014. RIA regulations came around 2013, and you were one of the very early adopters. So if I may ask you, what is the main reason for you to take up the RIA license?
Right. So way back in 2008, Gajendra, that's when the turning point for me actually was. I took up my CFP certification. And until then, I was basically into mutual funds, sales and insurance. But I did realize that somewhere there's something missing, and the pieces were not meeting. And I think there was some gap in terms of providing the best advice to clients. After doing my CFP, everything changed, and that's when we always started looking at onboarding clients to understand the complete financial picture, to understand the holistic idea of what they are approaching us for, what is their need, what is their objective, and not just start selling a product. So I think that so 2013 was very easy for us to take a call, because we anyway were in the direction of providing advice to clients, and if you're going to get paid for it through the SEBI regulations, why not? So I think that was something that really urged me to move in the direction of investment advisory, and I think it's been a very good decision on that front.
Fantastic. So, you're based out of Bangalore, and I'm presuming many of your clients would be from Bangalore. And, the assumption that we all have is clients in Bangalore are quite savvy enough, and they now know the difference between an RIA and an MFD, and they would be asking this question also to you. So, somewhere we always believe that we have to write MFD in our names, okay? Along with our name, we have to write MFD mutual fund distributor, and whether you like it or not, you have to mention it that way, because you cannot call yourselves an IFA or an RIA. Do you think this really helps boost your image internally as well as externally?
Yeah, I mean, absolutely, you're right in saying that the Bangalore audience is very savvy. Most of our clientele is in the MD and president of various technology companies, so they are very savvy. And frankly, they actually have done a very good background check about us, right? So before approaching an investment advisor, they possibly have seen my credentials, they've seen the background, they've seen what are my qualifications and certifications, how long I've been in the industry, who are my clientele. There's a lot of background check that happens, especially when it's a SEBI registered investment advisor, because typically they want to work with that person for their entire life, right? So they obviously take a good amount of time checking the background credentials and then coming to us. So yes, I think investment advisor has been a very, very important aspect of our entire company ethos and what we follow for all our clients. And most of our clients have been with us for over 18 years now.
Okay, fantastic. So since it's a corporate structure, you are allowed to do both MFD and RIA. So do you think this combination of RIA and MFD is the best way? Why not just RIA? Did you ever thought only I should do only RIA, or do you think RIA plus MFD is the right combination? And if you are fine to share, would you share how much percentage of your business is currently AUM wise in RIA versus MFD business, to just give a perspective to audience?
Sure. Right. So, I mean, we are very much into both advisory and distribution. The reason being the Indian, investor community is yet to understand and sometimes pay for services, right? So we also sometimes hesitate when it comes to paying a check for certain services unless we see value in them. So I think the most important takeaway in SEBI RIA's organization is, what is that value add? What is that extra service? What is that you're bringing to the table? Is it a holistic advice? Is it not just to do with mutual funds or, Sharpe ratio or a Sortino ratio? What else can I do for you as a client, right? So I could possibly create a business plan. I could do, will creation. I could do debt management. I could do taxation queries. And clients are looking for that, Gajendra. They really want someone to be the one-stop person for all their needs. So that is what made actually us take this route. And they are very much keen on wanting to, have all these services. In fact, today, most of the clients that we're onboarding are also onboarding for will, estate planning, debt management. Some of them are business startups. They want a business plan in place. So I think these are things that everyone is looking for as a holistic thing. So I think definitely the investment advisory landscape in the future is something to grow for and look towards.
And can you share what percentage of revenue comes from RIA and MFD?
So roughly assets, about 60% is in RIA direct, and about 40% is in distribution. And today, most of our new clients are onboarded through the RIA route only, and through a comprehensive financial plan that we start with.
Okay. So since you mentioned that, many people are still hesitant to pay fees, and that's why you give them an option of MFD as well, right? So if a client comes to you and just tells you that, okay, look, I don't need financial planning, I don't need this, I just want you to manage my mutual fund portfolio or stocks portfolio, whatever. Are you open for that, or you say no, you have to come through that route only?
So we also charge for that. So suppose you as a client were to ask that, I have a whole bunch of existing assets that I'd like evaluated, or I want a second opinion on whatever I'm holding today from whatever my financial advisor has given. They normally approach us for that. And for that, we either charge a one-time fee to evaluate and give them a complete rationale, understanding, asset allocation, risk profiling, current financial status. So it's a one-time activity. Or they see that and then they say, okay, let's move to the next step on the implementable actions as well that you are suggesting. So each kind of client is unique, but we try and ensure that the client comes as a comprehensive financial plan, because, to get to know the client, and only then you can offer the best solution to the client, right? So it's not about just saying we have this, and why don't you pick something from this? It's rather that what do you want, and what is it that you feel that is a problem statement today that we can address to solve as a need. So that has helped us, one, acquire clients better and retain clients also. So our attrition rate is very low because we are there at all points of time for it. So even an existing client who might get a kind of a query from a bank RM saying that, this product is there, immediately the client comes and says, hey, this is my financial advisor. I'd like her to give the last, kind of decision on this. If it's okay, I will go ahead. If it's not, I will not do anything. Right. So that kind of thing only happens when you're able to provide a holistic advice.
And what do you charge for providing this holistic advice? I mean, if you can share what kind of fee structures you run for financial planning and then for advisory, that would be very helpful, because that is one area which many MFDs find it difficult. What kind of pricing structure should I have?
Yeah. So when it comes to the comprehensive financial plan, we actually have three categories. We have a basic, we have a standard, and we have an advanced. And we actually created these categories because many people said that, your pricing may be a bit too high for us if you're asking us only a very comprehensive plan. So in the basic, we start at about 22 to 25,000. And in the advanced, it can go to about 50,000. And the pricing is a result of the complexity of their requirements, right? So if they are looking at much more out of the a complete financial plan and not just their goals or not just their asset management or not just their kind of net worth and cash flow analysis, etc., they're looking at more than that, then obviously the fees would also accordingly be a little higher. And that's a one time. Then we charge as a assets under management, and these are only for products or investments that require advice. So something like a PPF, we very much advise, but we don't charge for it, right? Because it's a fill it, shut it, forget it kind of an investment, and that's something that we always ask our clients to incorporate as part of their retirement planning or an EPF that they're holding with their company, right? So you don't really need to evaluate these kind of investment options because they're already available. And there is nothing to manage because there's no kind of market kind of link to them. The asset under management fee is approximately 1.25% on equity and 0.5% on debt. And of course, this is a very broad rate. It would differ client to client depending on the assets. Obviously, we have a slab structure. If the client has a larger AUM, then we try and reduce the fee rate. And some of our larger clients, in fact, are a flat rate. Of course, the SEBI regulation has now mandated that if it's a flat rate, it cannot exceed 1.25 lakhs a year. So it's actually a one-to-one between the client and the advisor, but a broad spectrum would be between 0.65 to about 1.25, 1.5.
And what about charging on assets like fixed deposits, choosing fixed deposits, corporate deposits, bonds, etc., where some kind of advice is required?
Yeah.
Do you charge fees?
So we don't charge, but it is very much provided as an advice. So the moment you come as a fee-paying client to us, we would obviously say that we are covering all the gamut of investments that are available. But things that don't require monitoring, like a fixed deposit or a corporate FD or a PPF or an EPF, we will advise on it, but we will not charge for it because there is no expertise that we are lending at the end of the day beyond, saying that please invest in this.
And what about stock advisory? Do you do that?
Oh, yes. Yeah. So that is very much chargeable and we do that as well. We just started that about 3 years back. And we are agnostic on which demat account the client holds. So the main point is, where do you need to invest? What is the sectors that you need to invest? What are the stocks that you need to invest? So that kind of advice is a resultant of their risk profile and the asset allocation. And then we provide the recommendation as to where the stock. So we do charge definitely for the stocks.
One challenge I presume you might be facing, and you can clarify that since you're charging, let's say 1.25% on equity, mutual funds or stocks, and sometimes if you add up your fees as well as the AMC fees, it might exceed the expense ratio of the fund itself sometimes. So wouldn't client come back to you and say, look, your charges are higher, and if I go through the regular plan route with you, it will be much cheaper. How do you handle that?
Yeah, that's a very good question, actually. So there, of course, it's based on the assets. So if a client, and we upfront show that, look, this is the regular plan, this is the direct plan expense ratios. Some of the clients who are very particular about it, yes, we need to ensure that our direct plan fees, but at the end of the day, it's not just the performance or the direct and regular mutual fund recommendations that we're doing, right? Like I said, it's a holistic service. Who is going to be charged? I mean, who's going to be paying for the gold reviews? Who's going to be paying for the nominee checks? Who's going to be paying for the capital gains? Or who's going to be paying for various services that we do throughout the year? The tax planning and the estate planning, etc. So it is a whole bundle of services. And like I said, a client can just come and ask us, hey, this is a proposal I've received from X. Can you evaluate and tell me what needs to be done? Or this is my current loan outstanding. Do you think I should do a bucket payment? Do you think I should increase EMI? Do you think I should be looking at various other options? Or do you think I should be investing in the market? Right. So that kind of analysis and checks is what you are actually charging the client for. It's not just the bottom line on the performance. And we try and make that very clear when we are onboarding the client. I think that education to say that, we are not just a trading kind of partner. We are not someone who's there overnight. We've been in the industry 22 years now, and we plan to stay for the long term. Right. So I think that is what the client would get value out of.
Fantastic. So one major challenge that I feel that comes to RIA model is fee collection. Fee charging is okay. Clients initially may come up and says, okay, I'm fine with the structure, but maybe after 1 quarter, 2 quarters, when they see the pinch of cutting out a check and giving it to you, without seeing much change in advice, in that 6 months, how do you handle that? And particularly when markets are down and portfolio is down and you're still asking for your check. You've been doing it now for 9 years, so you have a reasonable experience to share with us. That how have you handled it so far?
Yeah. That's again a good question. So initially, of course, there's always a holdback and always, questions like why, what am I paying for, what is the extra service that you're providing, etc. But frankly, Gajendra, if you are able to, illustrate and provide and communicate, more important, I think the word is communicate the value add that you provide to your clients. I think those questions would stop maybe in the second fee cycle. So by then they've realized that, hey, in fact, some of our clients say, when are you raising your invoice? Right. So it comes automatically because it's a cycle that we are following. We do a semi-annual kind of fee cycle. In fact, when I have met the clients, sometimes they say, aren't you raising your invoice? I said, no, it's not even due now. Right. So it at the end of the day, they sometimes seek the invoice or the bill from us. But I think that holdback or that questioning does not last beyond, the first 6 months to 8 months. Once they are, understanding what you are doing, what are the, and you remember that you always need to be ahead. You always need to provide that value add. You always need to add more and more to benefit the clients, right? So we improved upon our research drastically, and those are things that you have to communicate and show value to your clients as well. So it's not just a matter of charging, you have to deliver as well.
But do you face this problem of receivables that if your fees is due like 3 months, 6 months, then what do you do? I mean, do you let the client go, or can they convert into MFD option because they find it pinching to pay on a regular basis?
Yeah, so for such clients, actually, I think the collection cycle is typically 2 months after the due date, right? So if our due date is in April, by May end or June end latest, we will be collecting all our clients, and we use the NASH mandate, for the fee collection. So today, around 55% of our clients are under NASH, and the remaining either pay us through an NEFT or through a check collection. Some older clients prefer the check payment, so that's fine. So that's the typical kind of. Now, if a client has not paid for beyond 5 months or 6 months, after sending a lot of reminders, we just tell them, look, we won't be able to provide 1, 2, 3, 4, 5, 6, 7, 8 kind of services that we've been doing till now. And if you feel that you would not like to continue, here is the disengagement letter. And we provide a complete sign off on all their existing investments, documentation, updated portfolio goal reviews, and say a thank you very much and hope that they would join us back again.
Fantastic. The other major challenge which I feel in the RIA practice is on compliance. Fee collection was, of course, the main reason why many people don't go into this model. Can you please throw some light on how much time of yours or your team is spent on compliance?
Yeah. Very good questions, Gajendra. So definitely for the RIA community, and especially the September 2020 regulations that have come, mandate that even for someone like me who has 22 years experience, I need to do a postgraduate, right? So I'm just pursuing my postgraduate now. So they had mandated the certification, qualification, and experience requirements, both for yourself, and for your team. So we have a planning team, and we have to ensure that they also have these requirements mandated. And there are so many, like the latest could be the cybersecurity requirement that the RIA regulation asks for. So I think these are things that one has to accept and incorporate if you truly believe in what you're doing is worthwhile, right? So, I mean, from the beginning, like I said, 2008 was a turning point. So after that, everything that needs to be done to ensure that the business continues as a holistic advisory practice for the clients is what obviously an advisor needs to incorporate in their practice and organization. So I think it's a matter of accepting. And remember, the regulator is not against you if you're working for the client. So tomorrow, if there is something that maybe we have slipped on in terms of, not providing a detailed KYC or whatever, I'm just giving that as an example.
Right.
Then the regulator would obviously look back at the records as to what we have done and why we have done that, right? So even now we have annual compliance checks. So I'm the principal officer, and then we have a compliance officer, and inside the organization we have another officer as well. So these checks are done on an annual basis, and we have our compliance officer sign off on all the mandates. So the mandates typically are your qualification, your risk, your KYC, your certifications, your what are the rationales that you're providing for investment advice, what are the kind of philosophies, what are the asset allocation risk profile, are they matching according to your advice, right? So all these are now saved for viewing by any of the people. So if you just make that as part of your process, I don't think it should be a problem.
Right. And how do you maintain that Chinese wall in your organization? I mean, since you are primarily involved in advisory, a lot of your time and bandwidth is consumed in advisory. So are you personally involved in distribution as well, or do you have a separate team and you don't really look into that?
Yeah, no, there's absolutely, in fact, that's the shortfall. I really don't know how the operation side works. Sometimes I fall back on understanding certain aspects and nuances on the operation side. But I think that is something that we've maintained from the beginning. And I trust our operations team. They've been with us for a very long time, and they know what's best in terms of what is required for the client. My planning and my team stops at the advice, and then it goes over as a separate email for the execution by the operations.
Okay, fabulous. Now, since one other reason why people think RIA, it may have issues is scaling up the business, because you may not find enough clients who would be wanting to pay the fees, and as your clients base grows, collection of fees becomes a challenge, compliance becomes a big challenge. So do you think this has the room for scaling up also to maybe 1,000 crores, 2,000 crores tomorrow? Or do you think it will always remain a niche practice?
Yeah, so I think definitely for this industry to grow, consolidation is something that would work very well. Because if you want to maintain the same quality, right, and the same, we just don't want numbers and AUM and growth, but at the same time we want to grow and provide the same quality. I think the best way of doing this is through consolidation in the industry. Definitely, most of the RIA corporate advisors today are still also following the boutique model of advisory. Scaling is an issue, but definitely technology has enabled, and I'm a very big believer of technology, incorporated a lot even before COVID on technology. So I think that has helped us to a large extent.
Great. Something on your personal side, would like to ask. I think you live a very balanced life. Advisory and distribution itself is a balancing act in your company. But advisory business is very demanding, right? And you also run marathon. You are also volunteering for a couple of organizations like COFP. You are part of active member. You work with a couple of other NGOs also. And right now you're saying you're pursuing 2-year postgraduate diploma program in business management. So how do you handle all of this, and plus on the home front as well?
Yeah, that's really tough actually. So I think it's all about whatever is, what at that point in time that you're doing. So you give priority to what you're working on at that time. And I believe that fitness is very, very important. So, I've been into fitness right after college. In fact, in college and up to college, I was never into any sports at all. Just a bookworm. So after that is when I started realizing the importance of doing sports and other activities. And of course now the postgraduate, although however much I might curse it, I think that's a very good structured learning that everyone needs to. So if you were to ask me if there's a regret, yes, I should have done my MBA way back when I graduated. Yeah, but it's fine. You just need to move on and take on these challenges.
Fantastic. One last question from my end before we open up for audience questions, because we have quite a few audience questions that have come in. As Brijesh mentioned, that you work very silently. You want your work to do the talking, right? Majority of MFTs beyond Bangalore may not know about you, and thanks to this MasterStroke platform today, they will know about you. So, and you're never in the limelight. You prefer it that way. Why?
I think, your resume should not speak about you. Your work should speak about you, right? So as long as you silently do what you're supposed to do and do it honestly and with ethics, I think the success will automatically follow, right? So, I don't know if people know that I've been also one of the top 6 advisors in the country selected as in the book, The Wisest Soul, as the RIA, one of the top RIAs in the country. So I think these things will automatically happen. One should not seek these kind of benefits. As long as you do what you're supposed to do well and ethically and honestly, and you know that you're going to have a good night's sleep at the end of the day, everything else would automatically fall in place.
Fantastic. I've been given a reminder that kind of time's up. I'm so sorry that I couldn't take audience questions. Apologize for that. But I think we had a very good round of discussion. Thank you for the sharp answers, Dilshad. If you were on coffee with me, I would have given you a gift hamper. But I will let Brijesh do that for you or do that to you. So thank you for that engaging conversation. Over to you, Brijesh.
I think Brijesh's friendship is far more important. So thank you, Brijesh and Gajendra. Thank you very much.
And hearing you, every word that you spoke, I can tell you with my 20 years association and friendship with you, I knew everything what you spoke about, and everything is a carbon copy of what you have been doing over the last 20 years, and that is called consistency. So I will take one question from the Q&A poll, and one person is asking, distribution and RIA, what is the long-term scope? And he's asking from a 15-year perspective, which will flourish more, distribution or RIA? If you can give a short answer to this.
No, definitely the long-term view on this is advisory, and clients are seeking, see, at the end of the day, today you're getting all data and information on distribution at 250 rupees, 2000 rupees per year. What is it that the client would find in you if you don't do anything more than that, right? So definitely the future is advisory, and I would urge, and today there's like one RIA for 70,000 clients, and there are only 1,200 RIAs today in the country, right? I think I really would like to see this grow drastically. There's so much need for advisory today.
Okay, I will take this question of Bhavin. How did she get in this business and her initial journey? Be brief about this, but we need to have this answer from you.
Okay, so this is when I just finished my graduation. I thought I would possibly, taking up graduation also, I thought I would do hotel management. But that's when my father stepped in and said, hey, why don't you take up a finance course? And that proved very beneficial, because I think his words, he saw that I was good with numbers and with speaking with people. That's when he said that, why don't you take this up? And I worked with Aditya Birla for about 2.5 to 3 years. And then I started my organization in 2001. So it's been 22 years now since I've been doing this. And I'm really, really happy that I didn't do hotel management. I can barely cook well.
All right. And so I will now answer your question, which you asked me a couple of months back. Why me, Brijesh? And rather than using my own words to describe why I chose you, I will use the words of Mr. Prakash from Bangalore. He says, Dilshad was simple, but awesome and effective. God bless her.
Thank you very much. Appreciate it. Thank you.
Yes, thank you so much, Gajendra and Dilshad, for being on MasterStroke and enlightening the participants. We truly value your participation. Thank you so much.
Thank you. Thanks, Gajendra. Thank you.